Hello, everyone. With me today is Stefan Canavan, founder and CEO of Willow Isle Capital. I've worked with Stefan several times in the past, and our mutual clients speak highly of Stefan and his team. Willow Isle Capital has also been nominated in 3 different categories in the upcoming Bridging and Commercial Awards. So welcome, Stefan. Stefan, if you could maybe just briefly speak about your background and also what Willow Isle Capital does and the type of clients that you work with.
Yeah, I'll do my best. I've got quite a varied background, but I think that's probably what leads us to be quite a good brokerage. So I started in the city. I was a strategy consultant at Ernst& Young out of university, but I was obsessed with homes under the hammer and property when I was a kid. So as soon as I got a job, I bought a flat with one of my best friends and we did as much work as we could. We used to shower in the gym, run to the pub to go to the toilet if we didn't have a toilet at the time. And we kind of just built our way up from there whilst working full time. I then took a sabbatical from the city in kind of like my mid 27-ish age. I ended up setting up what was effectively a high-end project management company in London who undertook builds on behalf of wealthy people. And we completed about 30 or 40 projects for people across London, the largest two being 2 £4 million penthouses in Battersea. From that, I realised I didn't necessarily want to run a building company because it's quite difficult. So a lot of respect for those that do. And I moved into becoming a developer. And a lot of our clients from the project management company became the seed investors for that. So that development company undertook projects across London, Stoke and Manchester. We did new build, we did barn conversions, we did a 22-unit office to resi flat scheme in Manchester, and we did a lot of house refurbs, flat refurbs, that type of project. And whilst I really enjoyed being a developer, just circumstances in my personal life meant that I took a step back from it. And about 6 years ago, I was thinking, right, what do I really want to do? Where do I think I can add value? And whilst I was developing, I now know there are good brokers out there. But when I was developing, I didn't find one. And I felt that I was being charged a lot of money for not a lot of work. I was left to do most of the work myself. And the people advising me had barely refurbed a flat, let alone built a house. So I just felt broking space I had a lot to offer. Started Willow Isle up on the premise that I think developers and investors deserved more for less, and just felt that with my background, having worked in the city for a very large company and having a good financial background, and also going through the trials and tribulations and turmoil of developing, felt we could offer a unique insight, and the company was kind of born out of that. And 6 years later, we're still going strong. So that's me in a nutshell. But it's been a long journey to get here.
Excellent. And you've very much been in the coal phase, or maybe I should say concrete phase of the development sphere. And I think that brings a very unique experience into brokering. And I think a lot of your clients are, is it fair to say, SME property developers themselves?
Yeah, I mean, our client base is very broad. In terms of the company, so Willow specialises in all aspects of funding that are unregulated. So short-term business purposes. So bridging, development, refurb, mezz, equity, we kind of cover all of that. But we are also later this year launching a regulated arm to also cover residential mortgages and buy-to-let mortgages so that we can offer a fully rounded service. But in the bridging and development space, we cover everyone from your first investment purchase at 100 grand to serious developers who are doing 10, 20, 30 million worth of GDV a year. And we've got a team who help deliver everything on our side. The key to being a good broker is understanding each client, understanding each project and what they need. And even within the same client, different projects need different things. And when there's so much lending choice on the market, anyone can really go and stick some numbers into a calculator and spit out terms. I wouldn't say that's rocket science, or those terms are worth the paper they're written on. The key really is understanding the client, the deal, then understanding the lenders and their requirements, and then matching the right people to the right lenders and ensuring they're getting value for money. So we work with a huge broad spectrum of clients.
So Stefan, we're in early April 2025. We've just completed the first quarter of 2025. Can you walk us through some notable transactions that you and your team have completed in the first quarter of 2025?
Yeah, of course. We do simple cases extremely well, and also excel in really difficult cases. And I think a lot of people do bring difficult cases to us because we know we can handle them. One of those was a part complete development that we needed to refinance for 16 flats. And I'm sure you will know, having worked on part complete financing cases before, they're not easy. So that was a good one to get in and get done. And I've just attracted another part complete site, which we're working on. So hopefully that one goes as well. We had a few really nice larger development exit loans, which is where clients who finished a development want to refinance to release their capital whilst they sell the units to go and either repay investors or go and buy a new site, whatever the reason is. One of those was with you. So I'm not just saying it because I'm on here, but you were fantastic. So thank you. We've got a really nice scheme completing today, which is a new build scheme of 9 units in Isha. So that's got an 8 million GDV. So there's difficult cases, there's the big and sexy cases that look great on Instagram, but we take just as much pride in small cases. And Louise, who works with me, she was contacted probably about 8 weeks ago from a client who'd been let down by a previous broker and a previous lender, had 10 days to complete or they'd lose their deposit on an auction property, and we were able to get that one through in 10 days, save their deposit. They were obviously very happy. So we aim to, regardless of location, case size, we try and treat every case and client with the same level of respect and diligence, and just a big oomph to get things done. So whether it's 100 grand that needs to be done in 10 days or it's 10 million that's going to take us 10 months, we put in the same level of effort. But there's a real broad spectrum of what we've managed to get done in Q1.
And I think in terms of areas, because some of those that you and I have worked on recently, one in Essex, there's another one in sort of Lewisham kind of way. Are you guys pretty much national at this point? Do you cover developments in every part of the country?
Yeah, we do. In the age of technology that we are, someone can be introduced to you from, any part of the UK. You can build up a rapport over phone and Zoom. Largely, we do a lot in London, the southeast, the southwest. That's where I'm based though, but we have clients I've got at the moment on my desk, I've got a deal in Derby, a deal in Nottingham, a deal in Cornwall, a deal in Darlington. So very much can cover the country nationally.
Okay, so and from those transactions that you and your team have completed in the first quarter of 2025, are there any learnings or updates from those transactions that you'd like to share with the audience?
I think you should always be learning, and there's a few things I think if I was going to kind of give people some hints and tips, I suppose one that I'm quite proud of this, but is an analogy I made up, which is the gin and tonic analogy when it comes to financing. So when someone orders a gin and tonic, they often have a favorite gin, right? And they'll go to a bar and they'll specifically order that gin, and then they let the bartender put any tonic in the glass. Yet that tonic makes up 90% of the glass. And I would always say to clients, don't forget that they put a lot of effort, obviously into sourcing the equity and saving the money for the deal. But the debt is 90% of the money that goes into a scheme. It's probably 10% of the cost of the project. You kind of don't want to take it for granted, and you want to make sure you're definitely getting the optimal debt terms because they have such a big impact on your project. So I'd say do as much research as you can into your debt. The market is constantly moving. So, the lenders who were good last month might not be as good this month, and definitely the lender that you used last year or 2 years ago may or may not be competitive today. So I would always say shop around. Always do your due diligence. Sense check your build costs, sense check your GDV. Be cautious. The market is. I mean, it's hard to say it's stable because of what's currently going on, but it is actually more stable than it's been for a while. If you look at the last 5 years, 6 years. Brexit, COVID, Liz Truss. I think people did start this year feeling a bit more positive, but I would still kind of always promote caution in everything you do. And we often find a lot of our clients are always out there trying to, raise money for new deals. So I always just say, tell absolutely everyone what you do, because, you never know who might have into a site, or who might have some money they're looking to invest. So there's lots that clients can do.
So have there been any sort of updates or changes in the lending market that you operate in, that you spotted in the first quarter of 2025, that you'd like to share with the audience?
So Q1, I think, has been really interesting from a lending perspective. So I would say, since I've been broking for the last, 6 years, I would say this has been the most competitive quarter I have seen it between lenders. And we were meeting with a very well-known lender yesterday, and they couldn't agree more. There is a lot of deals out there, and there's a lot of money, but arguably there's probably more money than deals. And therefore, if all of the lenders want to hit all of their targets, they're having to, be more flexible, bring out new products, look at pricing, look at their routes to market. And we are seeing that with lenders, that there is a lot more competition between them. How they compete, like I say, can be across a whole range of factors, but it is hugely competitive. A couple of examples. I sent out it was a very strong deal last week. 3 lenders phoned me and said, "What do I need to price this at to win it?" It's not this is our pricing, it's we want this deal. How do we win it? So there are times where we are, rate cards go out the window a little bit, and we're looking at bespoke pricing, bespoke fees. And I think sometimes clients sometimes can see broker as, it's do I always need a broker, if they've done something before, but often they may not realize that, we do have an element of buying power. We do build these relationships with lenders that take quite a long time. And particularly in this market, we are negotiating certain deals with pricing that is just not out there on, the open market or rate cards. And then you get into the stage of, then the lender phones you and they're like, "Why didn't we win this deal?" And I'm like, "Well, because you got beaten on price." And I'm like, "Well, maybe we could look at pricing on the next one." And there's very much this negotiating type of view in the market, because people are keen to get deals done. When the markets weren't as strong over the last 12 to 18 months, this wasn't out there. So it's quite a good time being a broker, because you do feel that in certain circumstances you really are adding a lot of value, and ultimately hopefully saving the client a fair amount of money.
And Stefan, now that the first quarter's done and dusted, what are you guys looking forward to for the second quarter, and possibly even the third quarter? And so maybe comment on the fact that there seems to be, certainly, I'm not sure I can still call them the new government in their seats for about 10 months now, but there's clearly a move. There's this talk about this 1.5 million homes to be built, and some of the policies and legislations that seems very sounding in the right tune. They're trying to encourage all of that. So, what are you guys looking forward to in the second quarter, and possibly in the third quarter of 2025?
Yeah, I mean, I'm very interested, and all for any changes that the government want to make to help build more homes, help particularly SME developers, who I think do have a hard battle a lot of the time, particularly when you look at planning. So anything they can do to ease that burden on developers and investors would be hugely welcomed. I came into this year with a sentiment that hasn't really changed. That the best analogy I can give is, I feel for the last 5 or 6 years, and I'm sure you will agree with this, I feel like we've been on this absolutely crazy roller coaster of ups and downs between, like I said, going as far back as Brexit, COVID, unfortunately the Ukraine war, Liz Truss. We haven't seemingly been able to get through a year without a world-defining event. So I'm quite happy this year to be sat on the kids' teacups. Right, I don't need to be on a crazy roller coaster. I smashed too many laptops over the last 3 years, struggling with ever-changing environments. I would be quite happy with just a fairly stable year. I don't need base rate to come crashing down and mortgage rates to fall through the floor. I don't need the housing market to suddenly rocket by 5 or 10%. I would just like a year of stability that would allow everyone to plan, budget, feel comfortable, gain some confidence in their schemes, be happy that they can build at the right price and exit at the right value. I think that stability is, underrated at the moment. I think we would all do very well with a year of stability.
Absolutely. And Stefan, thank you very much for that. I certainly agree with that sentiment. I think we would all like a little bit of, just calm and stable economy and the property sector moving forward. Thank you very much for sharing your thoughts with us today, and very much looking forward to working with you and your team moving forward. I'm going to link to your website in the show notes below. Thank you again, Stefan.
No, it's been a pleasure. Thank you for having me.